discuss problem number 4. So let us see the problem number 4. Yes, see this. Problem number 4. Balance sheet of H and S Limited as on 31st March 2015. So if you see asset side, machinery and furniture, these are fixed asset. It is given for H Limited as well as for S Limited. And then there is 70% share in S Limited. That is nothing but holding company's investment in S Limited is given. Investment value is 2,60,000 and 70% you can take this as a majority portion. That means what? What is a minority portion? 100 minus 70%. Directly 30% is a minority percentage. Then stock is current asset, debtor is given, combined you have to write, cash at bank is also mentioned. Then there is a preliminary expense, like in the previous sum, we have to divide between minority and majority shareholder. So that is one more thing. And in minority interest you have to deduct the preliminary expenses because you know it is a capital loss. Then in the liability side, if you see, there is a share capital, shares of 10 each. For both the company it is given, H Limited as well as S Limited. Then there is a general reserve, profit and loss account and creditor. So everything is similar to the previous problem. Then what is different? That we have to see now. H Limited acquires the share on 30th June 2014 and on 1st April 2014, S Limited general reserve and P&L balance stood at 60,000 and 20,000 respectively. No part of preliminary expense was written off during the year ended 31st March 2015. Prepare consolidated balance sheet. So if you see the adjustment here, what is the acquisition date? Acquisition date is 30th June. 30th June is our acquisition date, and that means our financial year starts from 1st April 2014 and ends on 31st 3 2015. So here acquisition somewhere in the middle of the year. It is not at the beginning, it is not at the end, it is somewhere in the middle. So whenever acquisition date is in the middle of the financial year, we have to find out current year profit. Current year profit calculation is there. That is the different thing if you compare to the previous problem. Current year profit we have to see. After that we can calculate pre-acquisition and post-acquisition profit, and all other things are similar. And what about this one? S Limited general reserve and P&L stood at 60 and 20 respectively, means that means at the time of acquisition this balance was there. So you can treat this as pre-acquisition reserve and pre-acquisition profit. And no preliminary expenses was written off, means you have to distribute this amount among majority and minority. Even if this is not mentioned, you have to show. Yes. Now we will discuss about solution part. See this. There is one note. Whenever holding company purchases the share in the middle of the accounting year, in this problem, if you see middle of the accounting year means 30th June. It may be 30th June, 1st September, anything. So in that case, we have to calculate current year profit. Yes. So before that, we have to follow the format of pre-acquisition and post-acquisition reserve and pre-acquisition and post-acquisition profit. So working note number 1, calculation of pre-acquisition and post-acquisition reserve. So what about pre-acquisition reserve? This is given in the question. See this, it is given in the question. Directly we can write that amount, 60,000. 60,000 is our pre-acquisition reserve. What about post-acquisition reserve? Post-acquisition reserve, you have to see. You have to see now. See this balance sheet. If you see, there is a reserve column. Under reserve, you have to see reserves of subsidiary. What is the reserve of subsidiary? 70,000. 70,000 is the reserve of subsidiary. So this is a total reserve of subsidiary. So total reserve of subsidiary minus pre-reserve of subsidiary, you will get post-reserve of subsidiary. So what is the post reserve? 10,000. 70 minus 60,000. So there is a correction. If you see here, there is a typing mistake. 10,000 I have written here. You have to write 60,000. That is 60,000 is pre-acquisition reserve. So you will get answer 10,000 as post-acquisition reserve. Then second working note, if you see, calculation of pre-acquisition and post-acquisition profit. Before doing pre and post-acquisition profit, we want current year profit. Why we want current year profit? Because here acquisition occurred somewhere in the middle of the year. That is why current year profit is needed. How to find out current year profit? That is one more thing. If you see here, profit at the end of the year. Profit at the end of the year, how you can find out? By seeing the question. How you can find out? If you see the balance sheet, it is at the end of the financial year. That is why whatever the information given inside the balance sheet is also at the end, isn't it? So profit at the end of the year we want only of subsidiary company. What is the profit at the end of the year? 50,000. So 50,000 we know. From this we have to deduct profit at the beginning of the year. How to find out profit at the beginning of the year now? If you see the adjustment you can make out. See this, on 1st April there was a balance, it seems, that is 20,000 for P&L account. So 20,000 was there before the starting of financial year. So this is profit at the beginning. So whenever we want current year profit, then we can easily deduct that is profit for the beginning of the year from profit at the end of the year. That we will see now. See this, profit at the end of the year is 50,000, that is given in the balance sheet, and this profit belongs to subsidiary company. Less profit at the beginning of the year is given in the adjustment. So that you have to write here 20,000. Now you can get current year profit. What is the current year profit? 30,000. 50 minus 20,000 is 30,000. Yes, after knowing current year profit, you can easily find out pre-acquisition profit and post-acquisition profit. Why? Because if you see here, pre-acquisition profit, first thing you want to write here, profit at the beginning. Profit at the beginning, you know, that is given in the adjustment 20,000. If you see the adjustment here, date is very important. 1st April 2014, this information is given 60 and 20,000. So this is profit at the beginning 20,000, that is for P&L. Reserve is given 60,000. So that is not needed. Now we are considering about only P&L account. So 20,000 is the beginning profit, but acquisition occurred when? Acquisition occurred 30th June. So there is 3 more months in the financial year, that is April, then May and June. April, May and June. After 30th June, whatever the profit is there, that is post acquisition profit, and before the 30th June, whatever the profit is there, that is pre acquisition profit. So that is why here 3 months profit we want to calculate. So how to find out 3 months profit? That we can calculate with the help of current year's profit. That is why current year profit calculation is needed. That is necessary. Current year profit calculation, that we have already calculated. Profit at the end minus profit at the beginning, you will get current year profit. So now profit at the beginning you have written 20,000. Add 3 months current year profit. So that is April, May and June. So current year profit, you know, 30,000. So 3 months we want out of 12 months. So 3 by 12 you have to do. 3 by 12. So what is the answer? 7,500. So what is the total pre-acquisition profit? Total pre-acquisition profit is 27,500. That is profit at the beginning and profit for the 3 months before the acquisition. So this is about pre-acquisition profit. Now next thing we want to do is post-acquisition profit. Again, for post-acquisition profit also we want a current year profit. That is why it is very important here to see current year profit once again, and after June how many months is there. So that means from July to March, July, August, September, October, November, December, January, February, March, 9 months. So 30,000 into 9 by 12, that is 22,500 is our post acquisition profit. So now we have calculated pre and post acquisition profit. Any doubt regarding this, you can ask me now regarding first two working note. Yes, can you tell me now? If you have any doubt, you can ask me. Yes, tell me. Have you understood? Have you understood? Have you understood the calculation of current year profit? Any doubt regarding current year profit? When we want to, when we should calculate current year profit, can you tell me? When we should calculate current year profit, first thing that you have to know, when we should calculate that one, current year profit, whenever acquisition by the holding company is somewhere in the middle of the year, somewhere middle, that means it is not at the beginning or not at the end. In that case, what happens? You have to calculate current year's profit. How to calculate current year's profit? Profit at the end of the subsidiary company minus profit at the beginning of subsidiary company. You will get current year profit. Yes. So now we discussed two working note. Now after this third one is 70% of majority means 30% of minority. This is not a working note actually because it is directly given in the question. Just for understanding purpose, I have written 70% share means more than 50%. So 70% belongs to holding company means other 30% belongs to subsidiary company. It is very very simple. That is third one. Then fourth one, if you see calculation of minority interest. Once you know majority minority ratio or majority minority percentage, you can easily calculate minority interest. How to calculate minority interest? Three basic things is needed. One is share capital of subsidiary, total reserve of subsidiary is needed, and total profit of subsidiary is needed. So first thing, 30% share in share capital. Let us see the share capital of subsidiary now. Just you see the question, share capital of subsidiary is 2 lakh. It is given, so 2 lakh into 30%. 2 lakh into 30%, what is the answer? That is 60,000. Then the 30% share in total reserve. Similarly, total reserve of subsidiary we have to take, that is by seeing the question, balance sheet, 70,000 into 30%. Answer is 21,000. Then the 30% share in total profit. Again, total profit is given. That is once again we will see the question. See this total profit of subsidiary 50,000. So on this 50,000, take 30%. That is 50,000. So total minority interest 60,000 plus 21,000 plus 15,000, that is 96,000. But there is a preliminary expense calculation. Preliminary expenses calculation is there. So you know preliminary expense is a loss. So loss to the company. So that is why you have to deduct this one. 30% share in preliminary expenses. That is preliminary expenses. Total preliminary expense given in the asset side is 6,000. If you see 6,000. So 6,000 into 30%. What is the answer? That is 1,800. So total minority interest is 96,000 minus 1,800. You will get 94,200 as total minority interest. So this answer you have to show in the liability side of the consolidated balance sheet separately. So this is about third and fourth one. Yes. Now fifth one is calculation of majority interest. This is working note number 5. Calculation of majority interest. And if you see this here, again we want share capital needed, share capital of subsidiary is needed, and all other things separately we want calculation. That means you have to see the previous working note. For all this information, you have to see the previous working note. Pre-acquisition reserve, post-acquisition reserve, pre-acquisition profit, post-acquisition profit. For everything, you can easily get the answer if you see the previous working note. So now first one, 70% share in share capital. Why 70%? It is given in the question, given in the balance sheet. So 2 lakh is the share capital of subsidiary. On that you take 70%, you will get 1,40,000. So this amount you have to set off against investment. Why? Because because there is a, this is nothing but paid up value. This 1,40,000 is there, right? This is nothing but paid up value. So you know what is the cost of investment. Just we will check the cost of investment. What is given in the question? What is our cost of investment? That is 70% share in S Limited is 2,60,000. So 2,60,000 is the cost of investment. So here holding company is paying more. So one thing is clear, here holding company is paying more. Why? How you can say that holding company is paying more? By seeing this by seeing this one. See this. Here paid up value is very less. That means actual balance available in subsidiary company. But holding company, what they are doing, they are paying 1,20,000 more. They are paying 2,60,000. So there is a goodwill. Yes. So this amount you have to set off against investment. Second one, 70% share in pre-acquisition reserve. Now we want a pre-acquisition reserve total. That you can get if you see the previous working note, where you can get that amount. Working note number 1, pre-acquisition reserve 60,000. So 60,000 into 70%. 60,000 into 70%, you will get 42,000. Again, you know, this is pre-acquisition, that means long term in nature. You can write this as capital reserve. Then you have to find for post acquisition reserve, that is 70% share in post acquisition reserve is 10,000 into 70%. Again, from where we got 10,000? See the working note number 1. Working note number 1, post acquisition reserve 10,000. So 10,000 into 70% is nothing but 7,000. That is 7,000. You can write this as a revenue reserve. Why? Because this is short term in nature. Post acquisition reserve. Next, fourth point comes under majority interest is share in pre-acquisition profit. So here 5 point is common for every problem. One is share in share capital is common, share in pre-acquisition reserve is common, share in pre-acquisition profit is common, share in post-acquisition reserve and share in post-acquisition profit. That means total 5 points will be there for every problem, unless and otherwise if there is any, if there is no post reserve or if there is no pre-reserve, in that case points will be less, or else you will get 5 to 6 points under majority interest. So now 70% share in pre-acquisition profit. So pre-acquisition profit working note we have to see. Now pre-acquisition profit working note, that is working note number 2. There we have found out the total, that is 27,500 as pre-acquisition profit, and we should not take this one current year profit. We have to take pre-acquisition profit. So 27,500 into how much? 70%. 70% if you do, you will get 19,250. This is capital reserve. This is capital reserve. Why? Again, it is long term in nature. Pre-acquisition, long term in nature. Then fifth one, 70% share in post-acquisition profit. So post-acquisition profit also, if you see the working note, you will get. So let us see the working note number 2. There under point B, there is a post-acquisition profit 22,500. 22,500 into 70%. You have to do. So you will get 15,750 as a revenue profit. Why? Because here post is given. Whenever there is a post information is given, it is short term in nature. That is why it is a revenue. And whatever the amount you get as revenue, that you have to show in the consolidated balance sheet. That means this post acquisition reserve you have to show under reserve column, and this post acquisition profit you have to show under profit column. Profit column means it is a combined column of holding company and subsidiary company in consolidated balance sheet. Then there is 70% share in preliminary expense also. Why? Because it is a capital loss. 6,000 is a total preliminary expense. You take 70%, you will get 4,200. This 4,200 is a capital loss, and capital loss as per the accounting standard 21 treated as goodwill. So write goodwill in front of preliminary expense. So this is about working note number 5 consisting of 6 points. That is calculation of majority interest. After this, we can easily calculate cost of control. That is sixth one. So for cost of control, two things is needed. One is investment and one is paid up value. So if you see investment, from where you can get by seeing the question you can get. See this, if you see the balance sheet asset side, there you can get investment amount. See this 70% share in S Limited, 2,60,000. That is nothing but investment made by the holding company, 2,60,000. So investment amount is 2,60,000. We know. Now from investment we have to deduct paid up value. So paid up value of share, if you see, that is 2 lakh into 70%. Why 2 lakh into 70%? This is 2 lakh is subsidiary company share capital. Subsidiary company share capital into majority share, or else you can see the majority interest first point. Majority interest first point answer also you can write. That is why we have written set off against investment. So this is nothing but paid up value. 1,40,000 is our paid up value. So if you compare these two information now, 2,60,000 and 1,40,000, which is more, investment made by the holding company is more, paid up value is less. Whenever this type of situation comes, we can easily say that there is a goodwill. Why? Because here holding company is paying extra amount. Actual amount available in subsidiary company is 1 lakh 40, but holding company is paying 2 lakh 60. That means there is a difference of 1 lakh 20. The company is paying 1 lakh 20 more, means there is a capital loss to the company. Whenever there is a capital loss to the holding company, what happens? It becomes goodwill. So your answer will be cost of control is equal to goodwill, that is 1 lakh 20,000. That is working note number 6. After this, you have to see the last working note, that is set off of capital reserve against goodwill. So first thing we want total capital reserve, then we want total goodwill. So how to get the total capital reserve? For this information, you have to see majority interest working note. Majority interest working note, if you see, wherever you have written capital reserve, consider that amount. That is pre-acquisition reserve 42,000 plus pre-acquisition profit 19,250. What is the total? What is the total now? Total is 61,250. 42,000 plus 19,250 is 61,250. That is total capital reserve. Less total goodwill. How to get the total goodwill now? Total goodwill, again, if you see majority interest column, there is preliminary expenses, we have written goodwill. So take this amount 4,200 you have to take, plus from the working note number 6, there you got cost of control 1 lakh 20. So total goodwill is 1 lakh 20 plus 4,200, that is 1 lakh 24,500. So whether you check this amount, whether this is correct, 1 lakh 20,000 plus 4,200, that is 1 lakh 24,200. It has to be 1 lakh 24,200, because 60,000 into 70%, what is the amount? Can you tell me? 60,000 into 70%, what is the amount? Can you tell me now? 60,000 into 70. Just I will open the calculator. Let me calculate. 60,000 into 70. What is the amount, Kushal? 70%. 42,000. Okay. So 42,000. Yes, correct. But here 6,000 is there. Okay. So 6,000 into 70 is equal to 4,200. This is also correct. So 4,200 is goodwill, means 4,200 we have to take plus cost of control, answer is 1 lakh 20,000. So now here total amount is 1 lakh 24,200. Correction, this is 1 lakh 24,200, not 500, 200. That you have to correct in the notes, because of the typing error. Yes. So now net goodwill. Net goodwill, how to find out? Here if you see, the total capital reserve, that is negative balance is 61,250. Total goodwill positive balance is 1,24,200. So we want net goodwill. So minus these two information. Whether this is correct or not, we'll see now. 1,24,200. 1,24,200 minus 61,250. What is the answer? 62,950. Okay, answer is correct. But only there was a mistake under total goodwill to this one amount. Net goodwill is 62,950. Yes. So positive balance. That is why this answer you have to show in the consolidated balance sheet asset side. Yes. So all these working note you have to do before doing the balance sheet. Any doubt regarding these working note, you can ask me now. Any doubt regarding these working notes? All 7 working note. Yes, tell me. Akamsha, Ankita, Anusha, Ashish, Disha, Kushal, Nishant, Pooja, Pratish, Shifali. Tell me. Have you understood this working note? Holding company question comes for 24 marks. That is why you have to concentrate on this chapter, because if you know this, then you can easily score this one 24 marks. Yes, but it is bit lengthy if you compare to other problems. Bit lengthy problem, but doesn't matter. You can attempt this one. Yes. So I hope now everyone understood. Anucha is saying yes. Others are not responding. Yes. Have you understood, everyone? Ashish is saying yes. Kushal is saying yes. Ankita is saying yes. Okay. Fine. Now we will see the final balance sheet. Consolidated balance sheet. So let us see the consolidated balance sheet now. Consolidated balance sheet means combined balance sheet of holding company and subsidiary company. Consolidated balance sheet of holding and subsidiary company as at 31st 3 2015. And one more thing, if you see all the problem relating to the year 2015, you will come to know why. Because under Karunagar Nayak textbook, all the problem he has given the same year, that is 2015. That is why you will get common year. 2015 is common year for all the problem. Yes, but in the examination year will change, so that is no problem. So now let us see asset side. Goodwill, if you see 62,950. Why we have written 62,950? Because we have got a net positive answer. Net positive answer is equal to net goodwill. That is why we have to show it that in the asset side. After that, machinery is there, furniture is there, stock is there, debtor is there, cash at bank is there. So all these information you have to write combined. So once again, we'll move on to the question now. Question, if you see the balance sheet, there is a machinery. What is the machinery value? Holding is 3 lakh, subsidiary is 1 lakh. So total machinery is 3 lakh plus 1 lakh, 4 lakh. Stock also same thing now. 1 lakh 75,000 plus 1 lakh 89,000. Combined you have to write. Debtor 55,000 plus 30,000. Combined 85,000. Cash at bank 50,000 plus 10,000. 60,000. Why if shares in S Limited is not there? That is cancelled. Why preliminary expense is not there? It is written off. Yes, so all these information you have to write combined. And one more thing, debtor you can easily write combined. Why? Because here there is no intercompany. Suppose there is a supply of goods from a holding company to subsidiary, or there is supply of goods from subsidiary to holding company. In that case, what happens? There is a deduction from debtor and there is a deduction from creditor. But in this problem, that is not asked. So directly you can write. So now let us see that solution part of consolidated balance sheet. Machinery. H Limited 3 and S Limited 1, total 4 lakh. Furniture 70,000, H Limited, subsidiary 45,000. By seeing the question, we can easily write 1 lakh 15,000. Stock also same thing. And under stock, if there is an unrealized profit, again there is a deduction for stock is there. But in this question not asked. Deduction for stock is there and deduction for profit and loss account. Unrealized profit you have to deduct from both the side. One is from asset side and one more is from liability side. Yes. So now if you see stock H Limited 1 lakh 75,000, S Limited 1 lakh 89,000. So total stock 3 lakh 64,000. Then debtor 55 plus 30 85,000 combined. Cash at bank also combined 50 plus 10, that is 60,000. Now asset side information is over. Now let us see liability side information. Liability side share capital. Share capital shares of 10 each of H Limited. So H Limited share only we have to write. This is very important. We should not consider the share capital of S Limited. Why? Because this we have already discussed. It is cancelled and some portion goes to minority, some portion goes to majority. That is why that you should not consider. Only holding company share capital you have to consider. So let us see the question once again for better understanding. See this. Now share capital holding company 6 lakh. This answer you have to write, and this 2 lakh you should not write in the consolidated balance sheet. Only of H. Okay. After this, what else comes? General reserve. Now, general reserve of H Limited is given in the question. That is in the balance sheet 1 lakh 50 it is given. But of S Limited, when you are writing, you should not consider whatever given in the balance sheet. Instead of that, you have to see majority interest working note. Majority interest working note, wherever you have written revenue now. Where you have written revenue, see this revenue reserve you have written, right? So 7,000, that is post acquisition reserve of majority. Nothing but post acquisition reserve of majority and post acquisition profit of the majority comes in balance sheet. So 7,000 you have to add to reserve under subsidiary company column. Subsidiary company S Limited. So 1 lakh 50,000 plus 7,000. 1 lakh 57,000 is general reserve. Then there is a profit and loss account. That also same procedure you have to follow. Holding company, this amount will be given in the balance sheet. So let us see once again. We'll see this profit and loss account information. See now, profit and loss account information 70,000 given in the balance sheet. So this information we have to take, but we should not consider this 50,000 information. Why we have to discuss this one? Why? Because out of this 50,000, some portion belongs to minority, some portion belongs to majority, isn't it? So that is why we have to be very careful. We have to see only holding company's interest. That is why we have to see majority interest. Majority interest is equal to holding company interest. So if you see majority interest column, under that post acquisition profit, you have written 15,750. So this is the revenue profit. So you have to take this information 15,750 and write it under subsidiary company column. Subsidiary company, under subsidiary company, see this 70,000 plus 15,750, total profit and loss account 85,750, post profit of majority, that is for S limited in the bracket. Then there is a minority interest. Minority interest, you have to see the working note of calculation of minority interest, working note number 4, total. This total 94,200 you have to show separately in the liability side. Liability side you have to show separately 94,200. Okay. After this there is a creditor. Oh, so now if you see the creditor, H limited creditor is 90 and S limited creditor is 60. There is no other information. There is no other information. Let us see that. Once again, we'll see the question now. See this. Creditor 90,000 is of H and S is 60. Directly we can write because there is no intercompany transaction. So total creditor will be 1,50,000. And now we can easily find both the side total. What is our both the side total of the final balance sheet? 10,86,950. So this is how we are going to solve the problem. Any doubt?